Hey traders, this is Blake Morrow with Traders Summit, and we are once again. I'm so excited. Every week, I love to hear from Jim Welsh of Macro Tides. Jim, how are you?
I'm doing great, Blake, and hope you're doing well too.
I am. It's Friday, so it's never a bad thing when it's Friday, and especially Friday after a jobs report where we got a real big reaction in the currency market. We had a stronger jobs report. Employment was better. I want to say almost all the metrics were better,
Yeah.
but the market's still holding up at highs. We got yields moving up, so the Nasdaq's going to be naturally a little weaker. But
Yeah.
the S&P is holding on to its all-time highs, even with the
Right.
dollar strengthening. So what do you make of the price action and the data today?
Well, the data was strong. Wage growth 4%, so that's also noteworthy year over year. My anticipation was that we would see Treasury yields start to pick up, and we would see the Nasdaq start to falter because the Nasdaq has been benefiting from low rates. People can justify high multiples the lower the rates are. The key question is, how do the cyclical stocks respond? They got a knee-jerk pop this morning, which to me was understandable. The key is whether that can be sustained. A lot of the technical weakness in the stock market in terms of the advanced decline line and number of stocks making new highs, has really been ugly. But that's because the cyclical stocks, which have been performing less well because of lower rates in anticipation of COVID and all the rest of that, they may get a bounce. Now it's a question of whether they can take out those highs from about a week and a half ago. My bias is I think the market is making a high here and we're set up for a correction. I will change that opinion if the cyclical stocks really start to follow through next week.
What's interesting, and I know you follow the technical picture so well, and that's one of the real big benefits of subscribing to your newsletter is you marry the macro backdrop with the technical backdrop, and I love that. So in the S&P 500, if you take the highs from July to the lows, and this is basically the high, the low in the July move, the 127% Fibonacci extension comes in at 44.40, and that was the high today, was basically at that extension. So a lot of us are asking, is this it? Especially with, relative strength is always divergent, but that hasn't mattered in this whole move higher. So you think the top might be in. What's going to signal to you that it is in?
Well, first of all, in the last couple of weekly technical reviews, I recommended establishing a 1/3 short position in the S&P if it got above 44.30. That was triggered today. I think if we take out the most recent low that we saw early this week, that will be further confirmation. I also use the 5-day exponential and 13-day exponential on the S&P. When the 5-day crosses below the 13, that will add additional confirmation.
Interesting, and I'm sure people are now scrambling to adjust their indicators for that. So that's good. So let me ask you this, Jim. With this jobs report, and I was just reading on Bloomberg, and basically just to reference it, that a lot of the dovish members might actually change their tune here. We might look for comments from some Fed officials about further substantial progress in jobs. And it might confirm that we are looking to hear some sort of statement from the FOMC that there is going to be a taper, and the taper to actually start in this year. So did today's jobs report move the goalposts for you?
No, it didn't. From a standpoint that you have to look at the dates of the FOMC meetings. I discussed this in the August Macro Tides, and there's a meeting on September, I think it's 27, 28, and then November 3rd. People want to see how the economy responds to Delta. So this jobs report, they did the calculation or got the information from businesses and so forth, probably around July 12th. Well, as all we know is in the last 2 weeks or so, COVID, the Delta variant has really picked up. So I think most Fed members are going to say, yep, but we want to see what the August employment, the August employment numbers to see just how much Delta affected employment. So aligning the data that they want to see further additional improvement with the dates of the FOMC meetings, my bias is I think they will make the announcement on November 3rd and start tapering in January. So for me, this doesn't really move it that much. In my perspective, it reaffirms that time frame. But it kind of removes any doubt that this is going to be announced before the end of this year. I still don't think they'll taper before January, but we'll see. Hey, if you get another couple numbers that are terrific, they might, but they won't get the October employment report, Blake, until after the FOMC meeting on November 3rd. It'll come out on November 5th.
Got it.
So that's why the next two employment reports, the next one especially, is going to be, I think, pretty instructive.
So you're what you're saying is you don't think that the Fed Chairman Powell is going to announce during the Jackson Hole Symposium any type of monetary
Nope.
Shift in monetary policy?
Not at all. Too soon. Right. And I think, again, the doves obviously will be pulled forward based on this. But again, the goalpost is better improvement in terms of the job market. Yes, unemployment's at 5.4. I think the Fed wants to see it closer to 5 and ideally under 5. I mean, the doves, that is.
Yeah.
And, just need more data for that.
Well, sounds good, Jim. And you mentioned, in your August Macro Tides newsletter, here at Traders Summit, if you guys read what Jim puts out, we get a sliver of it. So how do you get your newsletter?
Well, you go to macrotides.com and you can kind of look at some prior issues. And of course, you can subscribe there.
All right, Jim. Well, as a Traders Summit, from our community, from us to you, thank you so much for spending your time with us. And thanks for your insights. We all appreciate it. And remember to find out what Jim does, click on the link below in the description to find out more about Jim's Macro Tide newsletter. So Jim, thank you so much. We'll see you next week.
Thanks again, Blake.
All right. Bye-bye.